Stop everything you are doing right now. Close your other tabs and put down whatever is in your hands. Because for the next 20 minutes, I am taking you inside the final stage of a systemic collapse that the financial world is desperately trying to keep quiet. This is not market commentary, this is not a prediction, and it is certainly not another false alarm. We have officially entered the resolution phase of a sovereign silver squeeze that is currently jumping from the commodities exchange directly into the core of the banking sector, and silver just shattered triple-digit territory at over $107 minus 110 per ounce as of today. For the next few minutes, I want you to forget the prices, forget the charts, and forget what social media is telling you, because the most dangerous moments in financial history never feel dramatic. They feel quiet, ordinary, and boring. By the end of this intelligence briefing, you will understand the 4 pillars of the silver endgame that will redefine your financial future. First, we will expose how defense and national security assessments confirm physical silver has hit critical scarcity levels. Second, we will break down escalating Middle East tensions, including fresh Iranian missile range claims up to 10,000 kilometers and heightened IRGC readiness alerts that make global silver logistics an uninsurable risk. Third, I will walk you through the mathematical trap of the extreme paper-to-physical ratio and why COMEX faces mounting delivery pressure with force. Majeure speculation swirling. And finally, I will give you the exact 8-sign exit strategy you need to scale out of your position. Before the parabolic spike, now well underway, turns into a total system freeze. This is the resolution phase. Physical demand is no longer theoretical. Industrial users, governments, and sovereign entities are taking delivery. Defense contractors have flagged silver inventories as strategically depleted. National security briefings now list silver among critical material shortages. Geopolitical flashpoints are multiplying. Iran's claimed 10,000 kilometers missile reach covers far beyond previous estimates. IRGC alerts have escalated to highest readiness. Shipping insurers are quietly declining coverage for silver cargoes in key routes. Logistics costs have become prohibitive. Paper silver still trades in billions of ounces, yet registered COMEX physical is vanishing. The ratio has reached levels never seen before. Delivery notices are accelerating. Force majeure whispers are growing louder. Exchange rules are bending under pressure. The parabolic move is already in motion. Quiet accumulation has turned into visible demand. Banks are facing margin calls on short positions. Here are the 8 signs to begin scaling out. 1. Daily delivery notices exceed 100 contracts. 2. Eligible silver drops below 50 million ounces. 3. Spot price holds above $105 for 5 consecutive days. 4. Major ETFC's net outflows reversing sharply. 5. LBMA reports unprecedented borrowing rates. 6. Asian physical premiums hit plus 30% over spot. 7. Central bank commentary mentions silver reserves. 8. Trading halts or rule changes appear on COMEX. When 4 or more align simultaneously, initiate staged exits 25% at first trigger, then 25% increments on each new confirmation. Do not wait for headlines screaming collapse. The system freezes in silence, not in panic. This is not hype. This is the endgame architecture. Protect what you have accumulated. The window is narrowing fast. The screen price you see right now is historical fiction. It is a lag behind a reality that most people won't understand until it is too late to act. Because once a failure of this magnitude becomes official, the meaningful positioning is already over. Recent assessments highlight silver's role in defense technology, from guidance systems and radar to secure communications, pushing it deeper into critical mineral status for national security. Strategic availability concerns are at levels raising alarms, with industrial and sovereign demand refusing cash substitutes. Under authorities like Section 232, once deemed essential to defense, governments gain extraordinary powers to override markets and prioritize procurement at any price. At the same time, the Middle East has crossed red lines that cannot be uncrossed. Fresh claims from Iran point to tested long-range missile capabilities reaching up to 10,000 kilometers, exposing far more of the Western world. While IRGC commanders publicly state forces are on heightened alert, with finger on the trigger readiness, these developments aren't just posturing. They signal deterrence, strains, and fear-driven decision-making. Modern wars do not need nuclear weapons to break the global system. They only need to block movement, oil, and shipping. Once tensions escalate, tanker traffic slows because risk becomes uninsurable, causing supply to drop and prices to surge violently. Just as we've seen in this 2026 parabolic run, while you were sleeping, the paper-silver market cracked wide open. Reports show COMEX registered inventories draining sharply down to levels like approximately 32 million ounces amid massive open interest fueling. Talk of accelerating squeezes and potential force majeure scenarios. Institutional players face mounting pressure. As models break under real delivery demands from industrial users and sovereign entities, we are staring at an extreme paper-to-physical mismatch, where claims vastly outnumber available metal in warehouses. This structure was built on the assumption that nobody would ask for the physical, and right now, that assumption is shattering. The quiet before the freeze is deafening. Spot has pierced $100, $110 territory, with futures lagging the physical reality. Defense stockpiles are critically low. Sovereign buyers are bypassing paper entirely. Geopolitical insurance blackouts are already hitting key shipping lanes. COMEX delivery pressure is unrelenting. Open interest dwarfs registered stocks. Force majeure clauses are no longer hypothetical. This is the squeeze entering resolution. The window for meaningful action closes fast. Watch these escalation signals. Registered inventories fall below 30 meters ounces. Delivery notices spike above 200 contracts. Daily physical premiums in Asia exceed plus 40% official Section 232 invocations on silver. IRGC, or Iranian missile test confirmations. Major banks announcing short covering trading limits or emergency rule changes. Sovereign funds publicly adding silver when 3 or more flash together. Scale out aggressively, 30% immediately, then tiered sales on each confirmation. Do not chase the screen headlines. The real move happens in the shadows. Before the system admits it's broken, this is not speculation. This is the architecture of collapse unfolding. Position accordingly before the freeze locks everyone out. China's tightened silver export policies kicking in this year have added friction to global flows, with refining dominance and new licensing rules contributing to the supply tightness that's propelled prices to record highs. The COMEX faces growing delivery shortfalls to hide or manage this. Exchanges have mechanisms like force majeure conditions that allow cash settlements at set prices rather than physical delivery. This isn't risk management. It's the system adapting in plain sight to avoid outright default. Imagine the 48th floor of JP Morgan's Madison Avenue Tower, where a single margin call for billions goes unanswered because assets and cash are not the same thing. A bank may be solvent on paper, but starved for actual transferable dollars, and in a margin call, that is all that counts. When trust vanishes, the overnight repo market where banks lend to each other starts flashing red as offers disappear. Under modern resolution playbooks, a failing megabank isn't always bailed out. It is bailed in from the inside, meaning depositors and pension funds discover their bank balance is actually an unsecured loan to a failing institution. You thought you were nowhere near the casino, but your life savings were sitting on the same table. History shows us exactly where this road leads, as every single currency system in history has eventually failed or been replaced. In 1920s Germany, the families that were prepared with functional stacks survived, while those with symbolic protection were wiped out. Silver is the amplifier of this crisis because it is essential to modern life, woven into solar panels, electronics, medical tech, and defense systems. Most of it is consumed and lost, not stored neatly in vaults. Because much of silver is mined as a byproduct, supply cannot respond quickly, even if prices rise sharply. As this 256% plus yearly surge demonstrates, if you walked into a coin shop today with silver at these triple-digit levels, you'd run into an invisible wall of spreads and fear. Dealers have memories of 1980 and 2011, and they're protecting themselves. With wide buy-sell gaps, sometimes well below spot. The spot price on your app is a fantasy. What you really own is spot minus whatever your local buyer feels like paying. The exit for physical silver gets narrower just as more people rush toward it. This is why your first milestone is 50 to 100 ounces, the survival stack that lets you sleep. Knowing you are not completely exposed, Silver works as a boring, repeatable behavior that becomes part of your routine. Right now, in January 2026, spot hovers above $107, $108 per ounce, with futures trailing the physical squeeze. China's licensing system for 2026 to 2027 exports has tightened flows despite recent surges in shipments to ease immediate fears. COMEX registered inventories have plunged toward approximately 32 million ounces, while open interest remains enormous. Delivery demands are stripping vaults bare. Force majeure talk is no longer fringe. The paper game is fracturing. Margin pressures on legacy shorts are mounting relentlessly. Balins loom in the background as trust erodes. Build your stack methodically. Start small, consistent, 50 to 100 ounces. First, then add on dips. Never chase. Physical and hand beats, paper promises. The system reveals its fragility slowly, then all at once. This isn't alarmism, it's pattern recognition. History rhymes, and silver is the verse echoing loudest. Secure your position. The routine today becomes survival tomorrow. But you must also have an exit strategy ready for when the top forms, because without one, all your gains could vanish in a flash. Watch for the 8 warning signs that the mania has peaked and reversal is near. 1. Retail mania, exploding lines, snaking around every coin shop, dealers turning off phones, websites, 404ing under traffic. 2. Mainstream media capitulation, every network, every outlet, suddenly in bullish silver, the new moonshot headlines everywhere. CNBC, looping price tickers 24/7. 3. Speculative futures at record extremes, open interest shattering previous highs. COT data showing commercials finally capitulating, leveraged longs piling in at absurd levels. 4. Industrial users stepping back, solar giants hedging or pausing expansions. Electronics manufacturers quietly seeking substitutes, demand cooling as costs become prohibitive. 5. New supply coming online, mothballed mines restarting production. New refining licenses granted, byproduct output ramping fast on the price signal. 6. Government intervention ramping up tighter export controls from China. Section 232 invocations accelerating, sovereign stockpiling, announcements. 7. Technical momentum breakdowns, failed retests of major highs, bearish divergences on weekly charts, volume collapsing on upticks, death crosses forming. 8. Extreme sentiment euphoria. Social media flooded with to-the-moon posts, Google Trends screaming on every silver keyword, even your barber asking about stacking once 3 or more of these signs align simultaneously. Do not dump everything at once. You scale out in disciplined 20% trenches to lock in generational wealth, while still keeping skin in the game for any extension. 20% at the first cluster of signs, another 20% on the next confirmation. Trail stops on the remainder to capture upside if the spike stretches further. We are living through unprecedented debt levels. Trillions upon trillions printed. Money creation on a scale that cannot end smoothly, amplified now by escalating tariff threats and geopolitical flashpoints. Driving relentless safe haven flows into hard assets. Scarcity does not knock politely. It simply disappears overnight, showing up as multi-week delivery delays. Premiums spiking 40 to 60% over spot, and abrupt policy changes that lock supply away. The quiet window where you can think clearly, research without FOMO, and build a meaningful position is getting smaller by the hour. Today, January 26, 2026, 3:52 p.m. in Rawalpindi, is the only day that actually turns your intention into cold, hard reality. Stay vigilant, stay disciplined, and remember, when the noise finally fades, preparation is the only thing that speaks. I will see you in the next intelligence briefing, Dolly. The architecture is solid. The squeeze is real. The exit must be surgical. Position wisely before the window slams shut.